Hello everyone, time to decode the ET Wealth newspaper. That's ET Wealth. And today the topic is IPO boom, gain or pain. What is it like? What are the lessons we've learned from this record breaking year where a lot of IPOs have been introduced? What there is for each investor to learn, especially us beginners who are wanting to skill up and really make some money for our financial goals. So that's the topic for discussion, and I'm Priyanka Bhatia from Women on Wealth. A quick disclaimer, I am not paid by Economic Times to do this decoding, so whatever you're listening to are my personal opinions that I have from whatever I read. I am a ferocious reader. I read quite a lot around wealth, finance, investments and more. And reading the ET Wealth newspaper has been one of my weekly activities over the last decade. So that's my habit, bringing it right for you so that you can integrate it into your lifestyle and make sure that you create wealth, you reach your financial dreams and build towards that financial freedom. So warm welcome everyone. Hi Usha, Kaveri, Maya. Good morning my people. Warm welcome. I can see Usha. So I know Kaveri is in Chennai. Maya is in Kerala. Usha, which city are you in? Because today I definitely want to see all the cities that we women wealth creators are logging in from so that we know which areas we are impacting, at least of our country. Hi Mukta, good morning. So Mukta is in Pune. So we have Chennai, Kerala, Pune, so part of Maharashtra. What about you, Usha? Where are you? And what about others? Which cities are you logging in from? Today, let's make sure the entire India gets covered. Hi, Archana. So, Archana is in Bangalore, I know. Got it. Usha is in Bangalore too. Got that, Usha. Hi, Sunita. Good morning. Which city are you in, Sunita? So, let's see. Our women sitting in different parts of the country bringing the change, and that's the biggest thing I'm proud of. Got that. Archana, Sunita, everybody in Bangalore, got that. I know Samprita is in Mumbai. Yes, the Pan-India Women on Wealth, Usha, absolutely. Got that, Sunita. Yes, Bangalore. Awesome. So impacting different cities, impacting the world and making sure that we are all growing together and seen as wealth creators. I think one of the biggest wishes I have is that women be seen as wealth creators. Not just as homemakers, family builders, nurturers, but there is this new tag that they get introduced to. Got that, Pooja? Hello from Mumbai. Sure, got it. And I'm hello from Delhi. Let's begin. Let's begin from some of the lessons that we've received with all the IPOs that got introduced in this year. So, ET Wealth here is talking about financial year 2021-22, which has just gotten complete. So financial year is from the 1st of April 2021 to 31st of March 2022. So this is just completing, yeah. This just completed and we're now moved to a new financial year, but that's the last financial year we're talking about, where 51 IPOs came in, initial public offerings. What are IPOs? So these are stocks of companies, new stocks which got introduced into the stock market. So this was an initial offer which was available for the public to subscribe to. That's an IPO. So newly listed stocks. So 51 of them were announced, raised, and they raised about 1,20,000 crore rupees. That's the amount of money which was raised with these IPOs. So about 32 newly listed stocks added roughly 34,327 crore rupees to investors' wealth, and 19 of them fell below the issue price. So issue price is the price at which the stock was issued, okay? Each stock was issued at a certain price. So 19 of them fell below the issue price, and they wiped out, they took out 24,582 crores out of the market. So 32 went up, 32 stocks, and they added 34,000 crore rupees. 19 fell, and they wiped out 24,000 crore rupees. Okay. Paytm IPO came, which was the biggest issue in the history of the Indian stock markets. Biggest wealth destruction happened with Paytm because the shares crashed 75%. It came down 75%, eroding, taking out 14,000 crore rupees from the market. Okay. So all of you who thought, oh, Paytm would be a big thing, start counting those lessons, because we can't just follow what we feel or what we think. There has to be substantial information, substantial financial information available, especially when you are investing your money. And if that's not available and you're just going on hearsay and all the noise that comes along, it can be crazy. So, if you guys notice, there is a lot of noise that is made around the stock market. And IPOs especially attract a lot of noise. But just because of the noise, if you're investing, or you're investing just because your colleague is saying, or your friend is saying, or your husband is saying, then that's not how you invest. So let's talk about the lessons you must take from all this wealth destruction that has happened in the stock market. Number one is always look for financials. Like I was saying, financial information is all available. Whether it's the profits, the debts, the revenues, the returns on investments, many more things. So in the entire stock investing course, we go over a 30-step methodology to check various aspects of the fundamentals of a company. So without checking the financials, without checking the fundamentals, if you're investing on hearsay, on tips, on advice, on noise, just because you feel that way, you think that way, it's a mistake. There has to be substantial background information that has to be available for you to make a decision. IPOs or any investment of the stock market is not gambling. It's a proper study. And when you really deep dive into it, that is when you make money. So checking the fundamentals is one of the many learnings that even ET Wealth is talking about, and I've been talking about it for the 11 years of Women on Wealth's existence. So here it's talking about the Paytm IPO, okay, under checking the fundamentals. It's saying though the Paytm IPO was overpriced, some of the blame for the debacle also lies with investors who missed the obvious red flags. So the investors missed the obvious red flags and they invested in the Paytm IPO. So the company had no clear competitive advantage. So look at it. These are part of fundamentals. And if you've done the stocks course, you will be able to relate to this, because we do talk about competitive advantages. And several analysts had pointed this out clearly, that Paytm's business model does not clearly showcase where the growth is going to come from and whether such growth can lead to profitability. And if a business cannot make profits, it cannot sustain itself. It can sustain itself with funding for some years, maybe more years, but eventually there is profitability that every business model needs to have. And analysts pointed out that profitability cannot be seen, where the growth is coming from cannot be seen. Kaveri is saying, after my initial resistance, I have decided that even if I don't buy IPOs, NFOs, I want to understand them. Brilliant. Yes. Can we move towards understanding them? The whys, the hows, the whens of these shiny objects. Established stocks or IPOs don't fall for brands or the ads. Research, research, research. And when they are so shiny and new, there is not enough data or records to be able to study enough. If it's a good stock, it will stay long enough to have records to study. Yes, and you will have many opportunities that will come to you to make money. You just don't have to buy everything that shows up for you. So Paytm came to the market with ginormous valuations without any sign of profitability and having no significant moat. We talk about economic moats in our course too. And economic moats are competitive advantages, and Paytm came in without that, without profitability, without economic moat. So it is a lack of clear focus and the execution risk in building a financial ecosystem which added to the pessimism. Okay, the second lesson is do not rush to invest. So like Kaveri just said, there are enough stocks which have decades worth of track record. And those stocks, those investments have huge track record of making money for its investors. So don't make the mistake. Do not make the mistake of buying into IPOs or anything. First, build a strong financial foundation with investments which are many, many decades old. First, build your foundation, financial foundation with such investments. Once you've built a strong enough financial foundation, you can always move to IPOs, NFOs, NFTs, and cryptocurrencies and all those new things which are coming in. But till then, just stick to investments which have huge track record, which you can study, which you can see have the track record of decades of making money for investors. Your hard-earned money as beginners need to go there. That's another lesson, okay? And I'm sure you and I have made enough mistakes to get that there are no get-rich-quick schemes here. None exist. तुक्केबाजी से आप एक चीज कर सकते हो, okay? एक बार कोई कुछ लिया and then you sold it, you made some quick bucks, fine, but that's not a recipe for sustained wealth. For sustained wealth, you need a very different way of thinking, and that is what I'm talking about. Guys, you and I can study. We're all intelligent women. We're all educated women. We all have enough to tell ourselves that we've succeeded in life. And money is also something we can succeed with. We can build all the knowledge. But if you don't have the way of thinking, which is absolutely right for your goals, even knowledge can't help you. So these are the lessons that I'm talking about today, which are inside of you building your way of thinking, your habitual ways of thinking. We're all creatures of habits. We will keep repeating the same thing over and over again. So can we really consciously build healthy financial habits, whether it's thinking habits or doing habits? We got to really be mindful of that. Third, we got to look at where is the money going. That's the third lesson today. So it is also important to check how the money raised will be used. So whatever money is being collected by the company which is coming up with the IPO, how are they going to use your money? Do they have expansion plans, or are they paying off their debt with that money? What are they using the money for? So if the company is raising money for expansion and growth, then it is a positive thing. But if the issue has a very high offer for sale component, it indicates that the private equity and early stage investors are trying to cash out. So is the money raised so that the private equity investors, okay, the earlier investors who invested in the company earlier, are they just trying to make money so that they can exit the company? Is that the strategy? Because if that is what it is, that people are trying to just get out with your money, it's not worth your money. Because only when, see, a business exists because it solves a problem for the world. Okay? A business is all about solving people's problems. And if a business is solving people's problems, then it has, and people are willing to pay to get their problems solved. So let me repeat this. A business is all about solving people's problems. And when people are willing to pay a price to get their problems solved, it is a business which makes money. and nobody, none of us want to ever take out money from a business which is a cash cow. Okay, so what we need to get is that if somebody is just trying to exit the business, you put in the money so that they can exit the business. It's not worth your money. So you got to check, you got to do a lot of background checking before you get into a business. So investors need to distinguish, okay? They need to distinguish what's happening, whether large investors are just dumping their shares on small investors. And we got to stay away. And this is why I say, I personally also do not invest in IPOs. I do not invest at all, no matter how many IPOs came. Yes, some I missed the bus, but well, I was already making money with other investments. So in a way, maybe I didn't miss the bus, at least how I see it. I don't think I missed the bus because already I had put my money in investments which are growing with velocity. So I am constantly not trying new things. I am just staying put with my current investments, and whichever ones I want to add more on, I add more money to it. So that's what I keep doing. Then fourth lesson is listing price is no indicator. So many investors pour money into IPOs looking for short-term listing gains. That okay, the stock will get listed and it will get listed at a price which was over and above the issue price, and we will make that little bit of profit in X number of days and exit. So some people are looking at making these short-term listing gains. And maybe, I don't know, maybe, but for myself, I'm sure that I'm not looking at any short-term get-rich schemes. I just don't look at that, अच्छा वो 10 रुपए बना के per share पे क्या ही हो जाएगा मतलब. Right? If I'm building, say, my retirement fund as a goal, and equities is always for long-term goals, तो मतलब वो short-term में आपने 20 दिन में 30 दिन में वो 10 रुपए बना लिए, बिग डील बड़ी. शायद वो 10 रुपए तो एक अच्छे इन्वेस्टमेंट में हम वैसे भी डालते तो बन जाते. सो आई डोंट नो कि हम why we're trying to do so much hard work when there is no need for it. I mean, we can, what I really believe in is, can we just sit back and put our finances on autopilot? While some people I notice want to constantly do something with their money. So you got to distinguish if you are that person who's constantly wanting to do something. Because there is not much to do beyond a certain point with your money. Like really seriously, I want to tell you guys, once you've built a financial system, there is not much to do with your money. It's just about following that system and putting the finances on an autopilot. It just comes, in an automated way. It goes out in an automated way. It gets invested in an automated way, and you have a clear blueprint of what's happening. So there is not so much to do, but there is so much to be mindful about, systematic about. And the more we move towards that, and the more okay we are about finance being boring. So the more, we're okay about finance being boring, the more money we will make. So can we have, or can we look at building a great relationship with boredom? Like it's okay to get bored. We don't need to keep entertaining ourselves with something around finances. It's okay. It can be stable, it can be boring, and can we let it be? Like one of my mentors, she says that letting go and letting something be is a huge exercise. Yeah, thank you for all that love. I can see a lot of love pouring towards me. Thank you. So yeah, can we just allow it to be? And it will allow us to be, is what I promise you. Okay, look elsewhere too. It's the fifth lesson from all that which happened in the last financial year. So for all the hype which is surrounding IPOs, the opportunity that they offer is quite limited. We looked up the returns of 543 stocks that got listed in the past 10 years and found that only 205 of them were still trading. Look at that. Please write this down if you have pens and papers. 543 stocks were listed in the last 10 years. Only 205 of them are still trading. So nearly 62% got delisted. They went out of the stock market. They delisted themselves. 62% of them. This is no joke, guys. And if you enter the market without studying, researching, understanding, learning, you are throwing your money in the dustbin. Best is don't invest if you don't want to learn. Let the money die the death of inflation, like I keep repeating. So the returns were even not spectacular with these stocks. Only 29 stocks. Look at it, 543 stocks listed, 205 still trading, and out of those 205 which are still trading, 29 stocks only. Barely 10%, 10-11% of them have given 50 to 100% return. 34 stocks went up 100 to 300%. Only 15 stocks went up 300% in the last 10 years. Look at it, 15 stocks out of 543 stocks. And I often say this in the market, guys, 5,000 stocks are listed in the stock market. Just 1% of them are worth your hard-earned money. Just 1%. That's it. And your job is, out of that 1%, can you really identify stocks which are worth your hard-earned money? Allow your money to work as hard as you do. Otherwise, we cannot retire. We cannot reach our financial goals. And I'm not saying this to scare anyone. I'm saying this really purely out of love and a commitment to make sure each one of you make it. You make it to your goals. You make it to your financial dreams. Kaveri is saying, you didn't miss the bus, Priyanka. You just stuck to the bus you were already on without jumping into any new bus. Yes. A lot of people who know me for the persistent person that I am. I'm a very, very persistent, consistent person. I don't go a lot of haywire. I just take one path and I just follow it till the time I can succeed at it. So I think, you just defined it. 2/3 of the IPOs shut shop in the stock market within a year. Got it. Yes. Got it. So moving further, last lesson, be willing to review. We can all make mistakes, and can we be courageous enough to acknowledge the mistakes? So what if we made a mistake? We're all humans. Let's not forget that. And I've made my share of mistakes before making the wealth that I'm talking about here. I made a lot of mistakes, like some of them I can point out. Right in the starting of my journey, I started with fixed income investments. I was young, guys. When I started investing, I was just 21. The mistake I did was, not even 21, maybe I was just 20. The mistake I made was I started with fixed income investment instruments. I did not begin with equity. That was mistake one. I clearly remember it, a very young Priyanka. Second mistake, I began with stock investing, and it was by being dependent on an advisor broker. I invested without understanding, lost 90% of what I had invested in the 2008 market crash. And I was so sad and disgusted with what had happened. Another mistake I made was I thought wealth creation was not for me. I gave up. That was another mistake I made. Right? Another mistake I made, I thought, this was, not my cup of tea. I just gave it up. I stopped looking. But the universe was really supportive, grateful. I'm really grateful to the universe because then the universe just sent in the right mentors. I got my stock investor mentor, Mrs. Neeru Tiwari. You know, most women in the community know her. Some of you in Delhi have even met her. And she taught me everything. And I started course correcting. You know, I started sitting in her office for hours. I kept practicing while sitting with her. I just kept being with her. Right? The biggest thing I did was I was just in an environment which helped me thrive financially. I was in an environment that was actually, you know, allowing me to be the future me that I always looked myself as. I got my serial entrepreneur mentor. I got my property investor mentor. And we just kept sitting, talking for hours. You know, another thing I did, which I think was a course correction, was, you know, I took a shift in my job, which was from 8 a.m. to 4 p.m. so that I can be free at 4 p.m. and get down to my study with money, investments, businesses, and more. So yeah, you know, the course correction could come because I was being with the disappointment. I was being with the sadness, being with what I dealt with and the mistakes I made. So we got to face it. We got to really be with it. And a time comes when we can go beyond it. Was there guilt? Yes. Was there sadness? Yes. Disappointment? Yes. Regret? Yes. Talk about an emotion, and I had it, and you know, some part of it I still have it. I still have that, you know, I really wish I started with equity much earlier. I would have been somewhere else inspiring many more of you. So, yeah, we got to just start reviewing, looking, distinguishing, and then letting go, going beyond, releasing all the fears, releasing the guilt, you know, releasing all the emotions. So guys, that's about the lessons for today. Please start typing. What are you taking away? What are you understanding? What are you learning? Ashwini, the numbers are an eye-opener. Got it? Yes, they are. Trust you me, anything I talk about in Women on Wealth is bases a lot of study. I may not be able to substantiate everything every time I'm talking because there's so much only that I can talk about. But yes, there's a lot of background to it. Kaveri, thanks to Women on Wealth, this all resonates with me. If I had heard this, I would have felt like I can't possibly study so much. But now I know that I can. And I am studying and contributing. It is not hard and can be done alongside a job and family commitments. Just need the commitment and willingness to learn. Thank you, Women on Wealth, and thanks to you, Kaveri. What a brilliant community leader you are. I'm proud of you, you must know that. Archana, even you started with fixed income investments? Got it. I have the same regrets of not starting with equity during my 20s. I get that. And yeah, I think I started with equities much earlier. Yes, I would want to start it much earlier. I would have wanted. But yeah, I think I still made it, and Archana, you're now making it. I know how consistent you've been for so many years that I know you. Right? I mean, you've seen the community grow in Bangalore and around you. So yeah, you know, I'm really acknowledging you for the commitment, the consistency that you've been demonstrating. And I know it has not been easy for you. Yeah, all these years. You made it. Congratulations. Okay, what about others? What is everybody taking away? And especially people who have not been speaking. I would love that all of you jump in, share, participate. Okay, Mukta is saying thank you for helping us show up. Thank you, Mukta. Just on Sunday, Mukta, one of your friends has joined Women on Wealth, the Money Gym program. So thank you for sending her in, and I'm looking forward to Pune rocking with one Women Wealth Creators gotten built inside Mukta. So now I'm really looking forward to change in Pune and Maharashtra as a whole. I think, you know, Maharashtra and Karnataka already have a huge history with Kerala inside of women's empowerment. So I think we all need to just take it forward. It's that simple. Yes, Mukta. Usha, One thing that is driving you is, my new friends are intellectual women from Women on Wealth. One day I also go and stand there. You're standing here right with us, hand in hand. Usha. That's how it is. Got it, guys? So any of you who really got contributed with this video and you would like to pass it on, so you can put it as your stories, timeline, any Facebook groups, whatever, WhatsApp groups, send to specific friends. So please do your bit. Let's together make sure that women are financially educated in this country, because that is what is going to really drive the change that we want to see among women, families and more in our country. Mukta, you weren't aware that your post encouraged your friend to join in. You didn't even know she was joining. Got it? I think it is just that one post that we put out. It is just that one communication that we put out, and we don't know who is just ready, waiting for something like this to be shared off. Yes, so Kaveri is telling Usha, you're one of those intellectual women. Brilliant. Awesome. So who all are sharing this video? Today I want to see everybody say, I have shared, I'm putting it out, I'm making sure this work reaches more people. So how many of you are doing that? Let's see, today how many friends do I have championing the cause? Got that, Mukta, Maya? Yes, we want Pune rocking, Kerala rocking. Got that, Kaveri? Chennai is rocking with Kaveri now. Who else is jumping in? Which all cities, towns, countries we are impacting? Know that financial education is actually missing in the larger scheme of things. We really need it. Got that, Diksha? Yes, loads of love to Kaveri, Usha, Diksha, Maya, Mukta and everybody who is here. Isn't it? It's the love ultimately that counts. So on this note, guys, I'm closing the live. Thank you so much for participating and thank you for standing with us in this mission. Your participation really truly counts. So keep making that improvement in your money life every day and keep spreading the word. Let's convert this from a mission to a movement. Usha, thank you for sharing the video. Loads of love. Take charge. Stay safe. Bye-bye, everyone.